If you've ever looked at a trading chart and just felt lost, overwhelmed by the hundreds of candlestick patterns out there, you are in exactly the right place. Today, we're going to cut right through all that noise and focus on the 6 patterns that are actually proven to work. Let's get into it.
And this is a huge deal, right? The truth is, most of the patterns traders spend months learning, the ones with all the fancy complicated names, they're basically just noise. They're unreliable. But don't worry, we're about to fix that for you.
So, what's the secret? How do you find the handful of patterns that actually give you an edge? Well, that is the big question, and it's exactly what we're going to answer today. We'll break down the 6 proven patterns and give you a dead simple strategy to use them.
But first things first. Before we can even talk about patterns, we've got to understand why we're using candlestick charts in the first place. They are the absolute foundation for reading what the market is doing. Think about it like this. A simple line chart, it's fine. It shows you the closing price, but you are missing so much of the action. A candlestick chart, on the other hand, gives you the entire dramatic story of what happened in that trading period. And that story is written with just 4 key pieces of information. The open, which is where the price started, the high, the absolute peak it reached, the low, the lowest point it touched, and the close, where it all ended up.
And that is honestly the best way to look at it. Every single candle is a little chapter in the ongoing story of the market. It's a constant tug of war, a battle between buyers trying to push the price up and sellers trying to shove it down.
Okay, so if every candle is a story, we need to learn how to read the language, right? And it really all comes down to understanding the 2 most important parts of any candle, the body and the wick.
The body of the candle tells you all about conviction. A big, thick body shows that one side was in complete control. That's dominance. A tiny little body, though, that shows total indecision, a really tight, hard-fought battle where nobody really won.
Then you've got the wicks. The wicks tell the story of rejection. A long wick sticking out the top means buyers tried to push the price way up, but sellers smacked it right back down. A long lower wick, that's buying pressure. Sellers tried to dump the price, but buyers stepped in and said, "Nope, not down here."
Okay, now that we know the alphabet, it's time to start reading the actual patterns. Let's kick things off with 3 incredibly powerful reversal patterns. These are the ones that scream, "Hey, the tide might be about to turn."
First up is the engulfing pattern. This one is super visual. You see a small candle, and then bam, a massive opposite-colored candle just completely swallows the previous one. This signals a really sudden and violent shift in momentum.
Next, we have the pin bar. I love this one. Think of it as the market shouting a powerful "no" at a specific price. That long wick shows a really aggressive rejection, telling you that one side is losing its grip and the other is taking over fast.
And finally, for this section, the 3-bar reversal. You see 2 candles going with the trend, everything looks normal, and then a huge opposing candle shows up and wipes out all the recent progress. This is a really strong sign that a reversal is well underway.
But hey, not every pattern signals a big reversal. Some are just telling you that a strong trend is taking a quick breather before it continues on its way. Let's look at a few patterns that help us read the market's flow.
The 3-bar continuation is basically a pause in the action. You get a big move, followed by a small, weak-looking rest candle, and then another big candle blasts off in the original direction. This tells you the trend is healthy and still has plenty of gas in the tank.
Breakout candles signal the end of indecision. After a period of quiet, sideways action where the price is coiling up like a spring, a single massive candle just explodes out of that range. This often kicks off a powerful, brand new move.
And our final pattern, shrinking candles. This one is so cool because you can literally watch a trend run out of steam in real time. You see a series of candles that get smaller and smaller and smaller, showing you that the momentum is fading, right before a big opposing candle confirms the reversal. So now we have our 6 proven patterns, but just knowing them isn't enough, right? How do we actually use them to trade effectively? Well, let's put it all together into a powerful, high-probability strategy. And I'm telling you, this is the most important part.
And here's the secret. A pattern by itself doesn't mean a whole lot. But when that same pattern forms at a key price level, like an old support or resistance area, it becomes a high-probability signal. Context is absolutely everything.
So here's the strategy, broken down into 3 simple steps. First, identify a key level on your chart. Second, be patient. Just wait for the price to actually reach that level.
And third, look for one of our 6 high-probability patterns to form right there as your confirmation.
So remember this, okay? The pattern is your signal, but the key level is your location. Trading is all about finding the right signal at the right location. When you combine those two things, your odds of success go up dramatically.
So, to wrap this all up, we've learned how to read the story of individual candles and patterns. But the real mastery, the real edge, comes when you can zoom out and understand the much bigger story that the entire chart is telling you. That's where you'll find your edge. Thanks for tuning in.